Okay, if you've been keeping an eye on the AI crypto space at all, you've probably heard the buzz about one token in particular. I'm talking about Venice, or VVV. This thing has been on an absolutely wild ride lately. So wild, in fact, that traders are saying it has, and I'm quoting here, gone nuclear. So today, that's what we're doing. We're going to unpack all the data, all the drama, and figure out what's really going on with this explosive token. All right, let's just start with the raw numbers because, wow, they are absolutely staggering. Get this. In a single 7-day stretch, the VVV token shot up by an incredible 147%. I mean, a move like that doesn't just turn heads, it pretty much snaps them right off. And this wasn't just some flash in the pan, some one-week wonder. No. That huge surge was actually part of an even bigger story, a full 300% recovery from its most recent low point. Think about that for a second. This one move, in just a few weeks, completely wiped out almost 5 months of downward bearish price action. Just gone. It's no wonder that one trader over on Binance Square put it pretty bluntly. They said the token, quote, just went nuclear. And they're not wrong. It was a totally vertical breakout with this insane volume that just grabbed everyone's attention. So that's the million-dollar question, isn't it? Is this all just market hype, a bubble waiting to pop? Or is there a real, solid engine driving this whole thing? Well, to find that out, we've got to pop the hood and take a look inside. Okay, so to really get the why behind these crazy price moves, we have to start with the fundamentals. It's time to head into the engine room, so to speak. We're going to see what VVV actually is, what it does, and crucially, how its powerful economic model is supposed to work. So at its very core, VVV is the utility token for a platform called Venice AI. And its big selling point, its main hook, is that it's a privacy-first AI. You can basically think of it as an alternative to all the big mainstream AI tools, but with a huge focus on keeping your data private and on offering uncensored models. Okay, so how does it actually work? Well, it's a pretty simple loop, really. First, you take your VVV tokens and you stake them. Doing that lets you mint a different token called DIEM, which is basically like your AI credits for the platform. Then you just use those DIEM credits to get access to all the AI tools. See? It's this neat, self-contained economy that's designed to link the demand for the token directly to how much the platform is being used. But having a use case is one thing. For a lot of traders, though, the real story, the thing that's truly driving this price explosion, it all comes down to one simple word: scarcity. The way they've designed the economics of this token is creating a really, really serious supply squeeze. And there are two big forces that are working together to squeeze that supply. On one side, you've got token burns. What happens is the Venice platform takes some of its revenue, goes out onto the open market, buys up VVV tokens, and then just permanently destroys them. Poof, gone forever. Then, on the other side, they've also put in place a permanent 25% cut to how many new tokens are created. So they're hitting the supply from both ends. And the impact of this, it is absolutely staggering. This is not just some idea on a white paper. As of earlier this year, that buy and burn program has already permanently wiped out over 42% of the entire initial supply of VVV. Let that sink in. That is a massive, massive supply shock to the system. So, okay, what do we have so far? A really powerful story, right? Privacy-first AI. And these super deflationary tokenomics creating a perfect storm for a price surge. But what does the market actually think? Let's take the market's pulse, because this is where we find a really fascinating split between the bulls and the bears. Now, if you're just a numbers person, if you just look at the hard data, the picture looks overwhelmingly bullish. I mean, an analysis of 12 key technical indicators shows that 9 of them, 9, are flashing buy signals. Only 3 are signaling sell. So, the data-driven consensus seems pretty darn clear. And if we dig just a little deeper, we see that the really key indicators, the ones traders watch like a hawk, I'm talking about things like the MACD for momentum or moving averages for trends. They're all pointing to a strong buy. In fact, the overall technical analysis from big platforms like Intellectia AI boils down to one simple rating: strong buy. And that, right there, is fueling a ton of this positive sentiment among traders. But, and this is a big but, the data doesn't tell the whole story. Not even close. The moment you step away from the charts and you start listening to what the community is saying, a very different, much more cautious story starts to emerge. Yeah, take a look at this quote from a user on Reddit. It really gets right to the heart of the main concern here. The big worry is centralization and the potential for what's known as a rug pull, where the developers just abandon the project and disappear with everyone's money. And this user argues that because the devs still control so many of the tokens and they control the actual servers, well, the trust in the system just isn't there yet. It remains unproven. So how do you square that circle? It's tricky, right? On one hand, you've got this explosive growth and all the data screaming buy. But on the other hand, you have these really serious questions about trust and decentralization. So let's try to put it all together and figure out what the bottom line really is. And this right here is the core conflict with VVV. It's a classic tug of war. You've got this super powerful narrative about privacy-first AI. You have this deflationary model that is creating actual, measurable scarcity. All the technicals are basically screaming, buy. But then, simmering just underneath all that good news are these totally legitimate, persistent concerns from the community about centralization and whether you can really, truly trust the people running the show. And all of that leaves us with the big final question. Is this combination of real utility and this cleverly engineered scarcity enough to build actual long-term value? Or are those underlying centralization risks a fatal flaw? Is this whole thing just another short-term story completely fueled by market hype? That, my friends, is the billion-dollar question that the market is desperately trying to figure out right now.